Good evening. This is the Elliott wave update for the NASDAQ 100 for Tuesday, July 26th, 2022. Interesting day. The market continued to decline pretty much from the opening today. Had stronger periods early, but had lengthy periods of slow, thin volume and slow movement. Getting there eventually, but fits and starts, and so it was not an easy trading day. In fact, it was a day where you kind of got flat and went off and did something else and came back, maybe traded a little bit more. In any case, though, I believe that the market has now dropped far enough to allow me to put into place what I've been wanting to label as wave C and the completion point for minor wave 4. And those are right there. And I put it in. Now, it is not uncommon in the NASDAQ for the NASDAQ to go, oh, really? And turn around and jump. And I'm talking 900 points, 500 points. 500 points brings us back here. If they decide they're just going to take this tomorrow, and whatever that Fed does, it is wonderful. It could be there. Now, what I won't do anymore is what I'm about to say next, but what I won't do anymore is actually go into a bullish or bearish conversation about how the market wants to interpret things, what Google reported and what Microsoft reported. Good Lord, that must mean something. They're wonderful. They're telling you, what they're telling you is what they did. And at the same time, what's going on now and what they look for in the future. How we react to what they say is what is even more important. And to be honest with you, it truly jumps down to there's no bullish or bearish tone in what a trader is doing right now. They're not going to go, oh, that's bullish, and they're buying it. It's a reaction to their positions, what they see, where value is. If you are a buyer or a seller, where you're willing to trade. And that's truly what it comes down to. The bullishness, the bearishness for me is gone. And yes, I have what you might term as a more bearish view because I am looking for the market to drop down, put in a low, and then put in a multi-month counter trend rally. I don't think we're there yet. So the spin for the last month has been, that's the low, we're off to the races, we're going up, and now we're just going. We're going 4,200 in the S&P, 14,000 in the NASDAQ. We're there, we're going. And it's like, I think we're early to make that call. I think, yep, we will get there. But I believe we drop first, complete this whole cycle, complete that primary A wave, right? If you remember the hierarchy here, if this level, this high, completed an intermediate fifth wave, a primary fifth wave, a cycle fifth wave, and a super cycle third wave. So on an Elliott basis, that puts us in a super cycle fourth wave correction. Now, time-wise, that super cycle third wave took more than 3, 4, 5 decades to get up to that level. And so, not that I'm expecting 3, 4, 5 decades to get down to a low for super cycle wave 4, no. But I am thinking in terms of longer than 6 months, 7 months, longer than 8 months. But nothing corrects all at once here. So let me explain, just so that we can go over it again, that we go down the line. So what we're correcting is a super cycle. What's coming is a super cycle degree, A, B, C. And so the ABC's got to be on a cycle level, primary level, intermediate level. Intermediate level is where I began. Intermediate A, intermediate B. We are coming into the completion of intermediate wave C, which I do forecast to come in somewhere down in here, or at least below 11,065, or 68, excuse me. So that would be down into this level. That completes minor wave 5, which started here, I believe, coming in. And then in turn, minor wave 5, intermediate, that's the yellow, intermediate degree C wave, and then I go up one more degree, which again is the primary degree labeled in green. And what it would complete is a primary A wave. All of the degrees were in a correction. Corrections develop in ABC structures, not 5-wave structures, ABC structures. Within those A's and or any portion of these larger ABC waves, we will have 5-wave rallies and 5-wave declines as a part. But the overall pattern will be A, B, and a C. So if that completes primary wave A, remember, each degree has its own set. What's going to be inside of a supercycle wave 4? An ABC of intermediate of cycle degree. What's going to be in that intermediate degree ABC? Excuse me. What's going to be in that cycle degree ABC is an ABC of primary degree, and then one more down, an ABC of on the side of the primary, an ABC of the intermediate degree. Well, we've got that done. So we're into that first wave in here. What comes next is a primary degree B wave, followed by a primary degree C wave, and that'll give us the A wave one more level up, one more degree up. So now you can see this takes time, and it's going to be very nice rallies, very nice declines, all combined. So really the ticket becomes, folks, that we have to turn around and we decide that we don't need to be bullish or bearish to make money. We don't need to be bullish or bearish to be successful traders. We just need to be able to read the market, follow the price action, have some methodology, have some indication of what a larger picture encompasses. Don't take a bullish or bearish position, but trade the numbers. And that's essentially what I am attempting to do by breaking it down on an Elliott wave basis, by adding moving averages and by using Fibonacci plus on a much tighter scale. So on a smaller time frame scale, using market profile. Because what it becomes down, or what it all boils down to, is actually value and where value can be found. So is it a supply and demand equation that comes into play to determine value? And value moves up and down on the scale as more buyers come in, as more sellers come in, and then we come up with the terms that we have a bullish or bearish. And now there are longer term trends. Agreed. Right now, my view is that the trend is down. So we're in a correction. The trend is down. Now, I don't need to have a bearish or a bullish attitude in order to make money. So I'm just like, okay, the trend is down. That suggests this is what we're going to be working on. I can put in levels. I can use Fibonacci. I can use Elliott. And again, build a picture and come up with parameters day by day of what we can likely expect within. All right, so now I'm going to dive right into that. I know I've gone into this a lot, but I just wanted to give this and a little bit of reasoning behind all of this and really what we have going forward. And because tomorrow's another big day, we're reacting, the market is reacting to Google and Microsoft's earnings. Whether they want to perceive them as good or bad or indifferent truly doesn't make any difference to how I want to view the NASDAQ or the S&P, or for that matter, the Dow. Because whatever happens in that stock is going to get reflected into this price. The same thing with Google. But now when you get them all open, then they're all going to matter to what happens into this index. Tick by tick gets put back into this index. I want numbers. So if I believe that this is the completion point for minor wave 4, we are in the beginning stages of a minor fifth wave down. I'm going to go to that 4-hour chart because it truly just puts a pretty good picture on it. And I kind of like this entire chart. Now, I've added a couple of things and you're wondering about what would these dashes be? What are those? And so I wanted to have a little bit better way of grouping EMAs and SMAs. And so I have the 200, but I had the 200 SMA as more of a kind of a lime green. And I decided to make them the same color, but just make one a dash and the other one a solid. So I did that with the 50. So the 50 SMA is watched by a lot of institutional trading and also a lot of funds and et cetera, et cetera. So I put it on and added it to see if we can't follow what triggers a lot of our orders and how they get triggered against these two, a 50 moving average, a 50 period and a 200 period moving average, whether it's a simple or whether it's exponential. So here we are. Now, if it's a C wave, then I would expect it to really start to pick up to the downside. We started to continue to do it, but it was a slow walk. It was thin. And I think that we're going to need volume. So here we are on the 4-hour chart. What did we come down and do? Back on the daily, we have broken below the 50 and we came down and touched. Let me go back over there. I meant to do it there. We came down, we broke the 50, closed below it. So that is one negative. But the second negative, which would have given us a bigger boost, is we did break below the 20, which was at 12,103. We went down to 12,070. We had pretty strong support at 51, at 50. And that's where I thought it was going to go, but it stopped. And of course, it just aftermarket just jammed itself higher. So it went down on a spike and just launched higher on the same spike. So the 20 was regained. But still, I think that the picture has now kind of got negative. But this was a much larger bar, of course, and now it's going to close up higher. Now, back down to that 4-hour chart, and let me get this open once again. Now, even though I have marked this, I'm going to tell you right now, I have to leave open the potential for this thing to turn and for this market to end up here by Thursday or Friday. Market is going to react the way the market is going to react. I will not choose a bullish or a bearish side. It is fruitless because you're either going to be extremely excited or very disappointed and wondering what the F is going on. I'd rather just trade the number. So that's my attempt. That's what I'm going to do. What I see, if indeed this is still just going to be in the infancy of a minor fifth wave, and it's the minute first wave. So on the 4-hour chart, open that up. Here we go. 1, 2, and then 1, 2, 3, 4, maybe. So still in the 1, breaking down in the 3rd. Or a B, 1, 2, 3, 4. No, is that the 5? Could be because it went up, it went slammed down and went back up. I don't know. So is it an ABC? And we came down, touched the 4-hour 200 EMA, broke the 50 SMA. And if it had more time, I bet you probably would have tried to go down and get back above it, because those are levels that the market can go to. Now, we can build either way. We won't have more information in terms of power until tomorrow at 2 o'clock Eastern. That's when the Fed makes their announcement. The word out, as you probably have heard, because if you listen to any of the pundits, that 3/4, 75 basis points, that's been priced in already. That's already in the market. Everybody knows that's what the Fed's going to do. They're all used to it by now, blah, blah, blah. Bull. It doesn't mean anything to say something as silly as that because you want somebody to buy it. Just play the numbers. I don't care if it goes to 12,600. The count will be the count. but you get to trade. So don't be bullish, don't be bearish, just be prepared. I am not expecting that kind of a move, but that doesn't mean it won't happen. So what I think, if this is the completion point, we should continue to go down, small rallies notwithstanding. And this one was a quickie. This got to 12,070. Next thing you know, it's 120 points higher. So it's pretty wild, that one. And it all happened like right after the closing bell. So and again, tomorrow we have some additional earnings, but the big one being the Fed. And then Thursday we have some additional economic numbers plus Apple and Amazon. So I think Meta is tomorrow. Yep. Meta's tomorrow. Facebook reports tomorrow. So we do have a lot going on. Now, I will tell you, I think that if we're going to go down, we're turning and we're just going to come back. We will again break below that, but we will continue lower. There remains support on a profile, on a market profile basis at 12,050. That's going to stay in line because it didn't get challenged. But I'll tell you, I think if it goes down and goes through it, it's just going to do it in passing, just like, hey, bye, boom, going through. And then I believe we're headed to below 12,000 and on towards 11,942, which is our first fib level for that minor 5. It's just a fib support level, not a fib finish level, just a fib support level. And so maybe we can get this first 5 down into here, maybe down to the 200 SMA. So we do have support coming off at 11,857, 11,942, and then again at, that was the 57, 11,735. So these are just price point support. Stronger support right here, and it's also Fibonacci at 11,475. Then we have a little bit of price support, but there's the bottom of the B wave at 11,351. That's also going to be support, but it should break without any problems. Then we're heading down to the 50% level. So how fast do I think that can happen? Well, it depends. We got back-to-back days of strong company earnings and the Fed. So be prepared. Be prepared for activity both ways. Today was slow. It was clogged up, and then suddenly would just go boom. It was not an easy trading day. So even using market profile, because it would go zip and it's there, and then it wouldn't hold, and then it was gone. It was like amazing. Okay. I really don't want to go into super great long detail because we'll be here all night. Be prepared both directions. I don't think we're going to start by moving up unless the whole world now wants to just take Microsoft and Google together and say, hey, it's worthwhile. And boom, they just rally it. I do not think that's going to be the case. We'll see, but I don't think that'll be the case. I'm going to finish it up there. Be prepared for up and down. Tomorrow's the Fed. Have a great trading day. On our next update will be on Wednesday, the 27th.